Hey guys, Chad Trades here. So over the past week or so, I've been testing out the Fibonacci retracement trading strategy as an extra confirmation for my setup. Now, obviously I've heard of fibs before. I've seen other people use them. I've tried it myself in the past, but I didn't really understand how they work. And I feel like a lot of people use them, don't understand the right way to use them. So in this video, I want to break down exactly what they are, how to use them the right way, and show you real examples of trades I took today, yesterday, and pretty much all this week using these fibs as an extra confirmation for my setups. Like I said, I've been using the Fibonacci tool all this week as an extra confirmation for my trade. You can see I used this today. Ended up making around $212 in 16 of my PA Apex accounts. Just over $3,000 in total here. Now, before I get into some trade examples of how to actually use them, right, I want to go over what are they. So I actually found this really interesting because whenever I use a confirmation or an indicator, I want to understand where it came from and how it actually worked. Because if you're just using it and you're looking at these random numbers, right, you don't really understand why it works. And I think when you understand why it works, you trust it more, right? You know how to use it better. So fib retracement levels stemming from the Fibonacci sequence are horizontal lines that indicate where support and resistance are likely to occur. Each level is associated with a percentage. The percentage is how much of a prior move the price has retraced. Retracement levels are 23.6, 38.2, 61.8, and 78.6. Then also the 50%. So if you don't know, Fibonacci numbers are used in a lot of things. It says Fibonacci numbers are found throughout nature. Okay, therefore many traders believe that these numbers also have relevance in financial markets as well. Okay, so these have a deep history. I'm not going to go too much into it, but it says Fibonacci retracement levels do not require calculation. They are simple percentages of whatever price range is chosen. They're based on something called the golden ratio. Start a sequence of numbers with 0 and 1, then keep adding the prior two numbers to get a number string like this, and you'll get something like this. And that's basically where the percentage numbers come from. Okay, so there's some videos I watched on this that explain it way better than I do, but it kind of made sense to me because everything is connected in this world, right? Especially the market. It's a free open market. It's gonna work like the open free world does, right? If we see these numbers occur a lot in the open free world, they're probably also going to occur in the free market as well. So anyways, just a little backstory of where Fibonacci actually came from, where the numbers actually originated. They're not just random numbers. They've been around for hundreds of years, got invented by famous mathematicians. So when it comes to trading, how do we specifically use the Fibonacci retracement? So the first thing is it's used for trends. So for those who don't know, I'm a trend pullback trader. So I'm only trading with the bigger time frame trends, and I'm waiting for intraday pullbacks to get in and continue riding the trend. So what the fib retracement does is it tells you where we could pull back to. So if we're in a trend, right, and we're pulling back, the fib levels give a good estimate of where we can pull back to as an extra confirmation. And then once we pull back to the level, right, we can look for confirmations when we hit that fib level. So let me show you an example of the trade I took this morning and how I use the fib retracement levels as an extra confirmation. This is the Dow Jones futures. And as we can see, we're in a nice uptrend. We have consistent 4-hour green Fibonacci candles. So obviously it's going to be higher probability to go long, right? We're continuing this green trend. So once I know what the bigger time frame trend is, then I can go into a 5-minute chart. As you can see on the 5-minute chart, we're also trading above VWAP. We're trading above our EMA. The trend is continuing to go up on this time frame as well. And then lastly, I like to go into a 2-minute time frame. And the market opened up here, right? I know the trend is up. I know I want to look for longs. Now, the next step of this is I have to wait for a pullback, right? Because that's what my setup is. It's a trend pullback. So anyways, the way I'm using fib levels is to give me an estimate of where we could pull back to, where the trend would be invalid if we pull back too much, where it could pull back to, see if that lines up with anything else. So if we take the fib retracement tool on here, basically what I like to do is go from the swing low to the swing high, okay? So this is the swing low. This is where we had the most aggressive buying. So I'm simply gonna click here and draw it all the way to the top, right? And what this line does is it gives me the whole amount of the trend, and then the fib levels show me where we can pull back to what percentage, right? As you can see, we literally pull back to the 61.8 to a T. So I knew during this pullback, right, before this pullback even happened, we have a high chance of pulling back either to the 50 or the 61.8. As you can see, the 61.8 also lined up with our VWAP as well, so acted as extra confirmation. Now, I'm not the type of trader to just put a limit order on the 61.8 and just immediately get in and hope it goes up, right? Like I said, I like to look for confirmations when we hit the fib level, because there are some times where we're going to hit the fib level, but the trend reverses, we keep going down, right? So that's why I always look for confirmations. The confirmations for me is I need to see some elevated volume. We had that here on this pullback. Big volume started coming in and we failed to keep going lower, right? So this told me a lot of buyers were absorbing those sell orders, and this could be a potential point where the trend starts to go back intact up to new highs. Okay, next thing I like to look for is I want to see the MACD cross. As you can see, we started crossing right here. Now I like to wait for a green Fibonacci candle to close. So basically, I got in right after this candle closed, and then I essentially just rode this thing up to our next resistance area up here where we have this aggressive selling. So I kind of scalped this. I didn't like the volume. I could have held this longer. As you can see, we eventually pretty much broke the high of day here. But that was an example of how I got into a trade using these fib levels as an extra confirmation. We can also see if I go to my trade yesterday on August 14th, I traded ES, so the S&P 500. And real quick, guys, if you guys want to join our Discord community, it's completely free to viewers of this YouTube channel. Inside of here, I post my trade recaps every day. I post my levels for gold, NASDAQ, and ES, and we also have an awesome community with all kinds of traders you can chat, network with. You can ask me questions in there and all that good stuff. So if you guys want to join this community, like I said, it's completely free to viewers of this YouTube channel. All you have to do is go to the first link in the description below, or just head over to this link right here. We'd love to have you inside. So anyways, as you can see, yesterday I got long at 12:52 Eastern time on the S&P 500. So let's go and look at that trade. So this is the ES. As you can see, if we kind of zoom out, the trend was up the past few days. So I already knew I was looking for longs on this day. I just had to wait for some proper market structure to form, and I only like to trade long above the VWAP. So the first few hours of the market, I had no setups to go long. We're just looking like we're trending down. We hit a key support level down here, and then we started ripping up. Now, as you can see, we just started slowly grinding up for a few hours here, and every pullback we got was very insignificant, right? So for me, personally, I like to see more of a value pullback. I want to see a deeper pullback, and typically it lines up with those fib levels pretty well, right? And that's why I'm using them as extra confirmation. So same thing here, we're going to get the fib retracement tool. This is what I did yesterday. Once this thing starts selling off, right, this is when I use this tool to see where could we potentially bounce at, right? Where could potentially pull back to. So I simply grab the swing low right here, and I drag this thing up to the high. And as you can see, once again, we can either pull back to the 50 or the 61.8. If we pull all the way back to the 78.6, I'm not as interested, mainly because we're below the VWAP. So I kind of want to see that extra confirmation with the VWAP there. So anyways, we started pulling back here. A bunch of volume started coming in. This was starting to look good, but we never got a bullish looking Fibonacci candles. All the candles had wicks at the bottom, which tells me price action is a little bit more indecisive. We had the MACD cross as well. And typically I like to see a no bottom wick Fibonacci candle within the first two candles here. We didn't get it until like the fifth candle, and I had to risk too much on my stop loss. So anyways, we ended up selling off again. Huge volume stepped in once again. And this time it actually pulled back to that 61.8. Once again, that golden ratio number. Then from there, we got our bullish Fibonacci candle, no wick at the bottom on the second green candle. And this is actually where I entered this trade. And I end up writing this thing up to around 73 right here where I took my profits. Okay, now we can go back to the previous day. Okay, so this is Tuesday, August 13th. I traded the Dow Jones again. So let's see how I use the fib levels for this, right? And I'm telling you guys, this works so good. It really tells you where we can pull back to. So I'm going to go back to the Dow Jones. All right, so I'm going to speed this up a little bit. Trend was already up on the Dow Jones. I already knew I was looking for longs. By the time the market opened, we're ripping up. And obviously, as a trend pullback trader, I know I'm waiting for some kind of pullback. I know I want to go long. We're above the VWAP. Everything's good there. And I simply use this tool to see an estimate of where we could pull back to, right? It's not always going to be exactly, but most of the time it's pretty spot on. Okay, so we're going to simply take this swing low and we're going to go to the high. Okay, so basically during the sell-off, I could see this was the high, and I know we're waiting for some kind of pullback. And I was thinking to myself, where could we potentially pull back to? As we can see, once again, we pulled back directly to the 61.8. And guys, it's not like I'm cherry picking examples. These are real trades I took. I only take 1 or 2 trades a day. So anyways, as you can see, pulled exactly back to the 61.8. We're just below VWAP, but it was fine because we had the support level as an extra confirmation as well. Big volume started jumping in right here when we got these lows. And I simply waited for my confirmations, the MACD to cross, and a green Heikin-Ashi candle that we got right here. And I basically rode this thing up to my target at the 650 area. Now, obviously the market's been trending up this whole week, so I've taken mostly long setups, but keep in mind this works the same way on the short side, okay? So for example, let's say we want to go short here. This technically goes against the trend, but just to give you an example, if you're scalping more, you take the same thing, right? We go from the swing high to the swing low. So let's say the sell-off gave you confidence that you want to start looking for shorts, right? Once we started going up right here, you could use that fib tool, go from that swing high to the swing low and see where could we potentially bounce at, right? Once we're near one of these levels, you want to look for those confirmations to get in short. So anyways, guys, I've just been playing around with the fib retracements the past week or so. Like I said, I've touched with them before, but I didn't understand how and why they worked, right? What they're actually used for. Like I said, they're used for trends. They give you an estimate of where we could pull back to. Then from there, we want to look for confirmations when we test that fib level. So anyways, guys, hope this video was helpful for you to understand how and why fib levels work and what they're actually used for. And real quick before you guys go, like I said before, if you guys want to join our Discord community, we'd love to have you inside. Like I said, we have all kinds of resources in here. We even have free custom indicators I use, like for volume, for example. You can see when I have elevated volume, it changes different colors. So we have different stuff like that in here. Like I said, everything is completely free. We also have an awesome community that you can chat. You guys share ideas in here. You can ask me questions in here and all that good stuff. So anyways, like I said, this community is completely free to viewers of this YouTube channel. We'd love to have you inside. If you guys want to join us, all you have to do is go to the first link in the description below this video, or just head over to this link right here. Let me know if you're going to start using these fib retracement levels for yourself. And with that being said, I will see you guys in my next video with another day trading lesson.